Welcome to this Energy Quick Chat, where we rub minds with stakeholders and players in the energy market. Today, we are moving our focus to the global oil market at a time when extreme geopolitical concerns in the Middle East have pushed oil prices higher, and even as the OPEC JMMC met this week and agreed to keep its oil output policy unchanged. Joining me now to unpack this latest development is Amena Bakr, Senior Research Analyst at Energy Intelligence. Amena, although there were alleged ceasefire reports between Israel and Hamas just yesterday, give us a sense of how the recent geopolitical crisis, especially in the Middle East, are influencing the global oil markets, considering the importance of that region.
As you rightfully pointed out, Justina, there's a lot of geopolitical tension that's currently happening in the Middle East. It's a very, very volatile environment. And I think relating more on the energy side, the attacks that we saw by the Yemen Houthi group that took place in Bab el-Mandeb, but also in the Red Sea, those are causing some concern for energy security or vessels to pass through. We saw announcements from companies like Qatar Energy that there are going to be delays into transporting LNG to Europe. On the oil side, to be honest with you, the geopolitical tension hasn't really managed to rise the price so much. If you would have told me the same events that are happening today 10, 15 years ago, I'd expect oil prices to go to 120. Instead, we're still hovering around the 70s, 80s zone. Today, Brent is back into the 70s. So I think the market is really underestimating the geopolitical tension that's going on, especially with the involvement of many OPEC states, including Iran and Iraq. These are all major producers. So I think there's a kind of judgment by the market here in seeing the geopolitical risk.
Yeah, I would have thought that we'll be looking at $100 by now. But the Russia-Ukraine war continues after almost 2 years. Has this added any implications to the Middle East crisis, which is now impacting or not impacting demand and supply dynamics?
I think, the focus has really shifted. The Russia-Ukraine conflict has been going on for some time now, and the shift in focus has been more on the war on Gaza, which is Israel is waging against the people in Gaza. So I think that, the crisis that we saw between Russia and Ukraine managed to re-divert some of the oil flows. More of the Russian crudes were going into Asia. We saw discounted crudes also landing in India, in China, etc. So the flow of how oil was being transported changed a little bit with that crisis. I don't see that crisis immediately impacting energy markets as much as the Middle East geopolitical tension could potentially do that. So for the time being, I don't see any kind of escalation on that front, which would translate into something that would impact energy prices.
Yeah. So I heard you speaking some time ago, and I remember, I think last year, you said the OPEC cuts could last for the whole of this quarter. So what specific market conditions will the OPEC JMMC be monitoring, and what do you think might trigger additional measures from the group?
Well, right now we are under an OPEC Plus agreement that is a kind of multi-layered agreement, which includes the last agreement, which they had to cut 2.2 million barrels a day. And these are voluntary cuts where a number of OPEC states have agreed to take part in these cuts. So this 2.2 voluntary cut lasts until the first quarter of this year. The group is due to decide whether to extend the cut or bring back some of that supply in the market. We're due to find out if that happens by March. I think the major factor here, Justina, and what you're after is demand. They have all their eyes on how demand is going to respond. OPEC is still very bullish on demand growth. They haven't changed their figures. What we saw from the JMMC when they reviewed the numbers is that demand they expect demand still to grow by 2.2 million barrels a day this year. This is much stronger than our forecast, for example, at Energy Intelligence, which is around 1.2 million barrels. I'll give you another example. Aramco have a growth rate of 1.5 million barrels. So there are many numbers out there, but the main factor to determine if some of that supply is going to return to the market, I think they're watching two major factors: the demand response, but also the level of stocks, which, to be honest, the deal is quite effective and did manage to bring back stocks which usually build up in the first quarter.
Okay, so where do you see oil prices headed, and what factors do you think will have the biggest influence in the coming months?
For this year, I mean, we're still seeing Brent average $80 to $82 for throughout the year. I think geopolitics will continue to be a wild card for oil, but also demand. I mean, one of the major reasons which we keep hearing, at least from traders, is that why oil prices are not reacting to the geopolitical conditions, because people are still really concerned about demand growth, especially demand growth from China. So those are the kind of determining factors that we will see. It also remains to be seen how OPEC policy will shape up, whether or not the group will extend those voluntary cuts into another quarter. They might need to do that for another quarter. Yesterday, following the JMMC, the Russian officials said that they are willing to take whatever action is needed, which is a positive sign. It shows unity within the group, especially, Justina, as we saw last year, the announcement of Angola to leave. It's very important for this group to remain united in their goals, and they seem to be very united, and they believe that their policy is having an effect in balancing out the fundamentals.
That unity is very important at this time, especially with Angola out of the table. Amena Bakr, Senior Research Analyst at Energy Intelligence. Amena, I appreciate you for coming in. Thank you so much.
Thank you, Justina.
And that's our quick chat on Energy Frontiers. Thank you everyone for watching. Make sure to comment, like, and subscribe to see more videos like this, and follow Frontier Africa Reports across all our social media handles. Bye-bye.